What's happening, guys? Welcome back to a new video. This video is going to be about the 3 most important rules that you're going to need in order to be profitable in 2022. So if you're new around here, drop us a like, subscribe if you're new, and let's get into the video. Okay, so number 1, lower consistent profits. What does that mean and why am I saying lower? Now the key word in that sentence is consistent. Now for me, over the last 3 or 4 months, I've been mainly focusing on adding smaller positions to my position that's currently running instead of hitting it one big trade and going for it all in. Now the reason why I'm doing that is because it's given me more room for error. So a lot of the time you do have on the UK Opens, US Opens, you do get quite a lot of whippy motions going on. So if you've gone full whack on one position and all of a sudden you get whipped out by 30, 40 points and then it comes back in your position, it's probably one of the most frustrating things as a trader. So for me, what I'm doing is almost a third of my position and giving myself 2 to 3 positions to add if I come offside a little bit. So let's say, for example, I'm on Wall Street, I go in, I go long. If market pulls back by 20 points, if I'm convinced it's going a certain way, for whatever reason, the economic data might be bullish or whatever it is, I will go again, add another long position. Then again, another 10, 20 points, I'll add another long position. So all the while I'm doing that, I'm not going full margin and full whack onto a position and giving myself only 30, 40 points room for error, because if it goes wrong and I'm stopped out completely. But what I'm doing is doing a third position size and lowering my size down and allowing the market to do its whippiness before it then pushes off in my direction. Now, as I've said before, this has allowed me to be a lot more consistent with my trade, because a lot of the time what was happening before, and you'll notice this as well if you do go big size, that you do get whipped out a lot, but then it will go in your favor and you end up pulling your hair out. So I ended up sitting down with someone who's helped me massively in my trading. He said, look, lower your position size and add to your position as it comes further away if you are convinced on where it's going to go moving forward. But obviously in that sense, you have to become very disciplined in order to cut it when you know that you're wrong. If I've gone 50, 60, 70 points offside on the open, realistically, I'm probably wrong. But what that allows me to be is when I'm a third of the position size, I'm not panicking because I'm 500, 600, 700 pound down. I might only be 150, 200 pound down or whatever it is. And if I'm still confident and I know a certain way where it bounces off a round number or whatever, I will then add again at that round number. And if it then drops below that, I was going to lose anyway. But it's just giving me more chance in the market, and you're adding into a stacked position instead of just going crack and smacking it and coming out. And what that has allowed for me is to be consistent. A lot of the time before, when I was trading, I'd have a really, really good day, then a bad day, then a really good day, and then a bad day, and then a couple of really good days and a couple of bad days, because that was me just hitting it. And then all of a sudden I'd be right and then I'd be wrong, and there was no consistency with that. So this has allowed me to be more consistent and allow the market to breathe a little bit before it moves in your favor. So if you are trading, you are looking to trade, don't just whack something full margin and whatever it is you're doing. Try and give yourself a third of your position size to allow the market to breathe, and then add as your position moves in your favor, or if you're convinced of a certain support or something's going to hold, again, add at that support to get long or whatever you want to do. So yeah, lower consistent profits. Don't try and whack the market and make 10 grand one day, lose 5 the next, make 10 grand the next day, lose 15 the following day, because that's not how you get consistent. Lower position size, allow the market to breathe, and just take your money and come away. Stop double dipping and triple dipping. That's for a whole nother video. Okay, so number 2, risk management. This will never go away, and it will always be in my top 3 and always will stay in that area, because risk management is so important. And again, when you're talking about being consistent, risk management is your number 1 reason why you are consistent. You know, a lot of people will make 10 grand in one day, 15 grand lost the next day, and then back and forth, back and forth, back and forth, because their risk management is not tight enough. For me, as I said, I know when I'm wrong in a position. I won't try and let that position go 500 points offside to then come back onside. I know if I've gone 60, 50 points plus on an open wrong side, I'm probably wrong. And if we've broken a large support or broken a large resistance or something, then I know that it's time to cut that position. I won't sit there and hold and pray, because I remember reading something on Instagram. It's quite a good quote. It's something like, if you're ever praying for a position, it's time to cut that position, because you should never be in a position where you're praying that a position comes back in your favor, because one, you've probably gone too big, you've over leveraged, and you're about to blow your account. You should never be in that position. And again, leading back to what I was saying before, if I'm a third of my position and it goes 30 points offside, I can then add again. And if it goes another 30 points, I can then add again. But because I am 50, 60 points offside, which can happen in seconds, if that, I'm not sitting there sweating, because if I am confident this is just a whippy market, then I can add again and look to carry on the position upwards. Instead, as I said, just going in, whacking it, going really, really offside, blowing half my account, and then wondering what the hell went on. So again, risk management, super tight. Give yourself a maximum daily loss, a maximum profit target that you want to hit. Stick to those rules, because as I said before, the only way you're going to grow your account is if you stick to exactly what it is that your rules are. Write your trading rules out. I don't know where mine are. No, I think they're in the office still, but I've got my trading rules there. I write them down, 5 to 6 rules I've got written down, amount of trades that I'm doing, my maximum daily loss, maximum profit target, 5 to 6 different things that I've got written down. That's really, really helpful, and it can keep you on track with your trading. Get a trading journal as well. That's another important thing to do. And last but not least, the most important thing I found with trading, right? And nobody likes this, nobody wants this to happen, but is learning to take a loss. Learning to take a loss is so, so important. I remember seeing a quote on Instagram before, and it was something like, if you can't get used to losing £10, then you're never going to be able to manage a £1,000 account. If you can't get used to losing £1,000, then you're never going to manage holding a £10,000 account. If you can't get used to losing £10,000, then you're never going to be able to manage a £100,000 account. So it's almost like you're training your brain to allow you to get these losses and take these losses. You have to take the losses like you would do in any normal business. You have to treat it like an expense. If you're someone that always wants to win and can't get used to losing and you never want to lose, trust me, if you're a new trader, and even now, you're going to lose trades. But the important thing is that traders that know how to take a loss and take the loss on the chin and then walk away, don't jump straight back in out of frustration or anger, they're the ones that stick around the longest. You know, a lot of these traders come and go, and you see them come in and they'll be around for 3-4 months, and then they'll blow their account and they'll get really frustrated, and then they'll come back and do it again and do it again, and then they'll just blame the markets. Truth is, they didn't know how to take a loss, they couldn't take a loss, their risk management was terrible, and they were trying to go from making millions of pounds overnight, which really isn't how trading works. So again, number one, consistent low profits, consistency. If you're finding that a lot of the time that your position, you're getting whipped out if you're trading the opens, lower your position by a third and then add your positions when you're a little bit offside, or even when you're onside. You know, if I go into a position and I go onside by 30, 40 points and I've broken a value high or whatever, I'll add again and then I'll add again. I won't just go whack and then hopefully it goes up in that direction. If it doesn't drop by 30, 40 points, I've wiped out my daily loss for the day. It becomes a lot harder when you do it that way. So drop your position down by a third and then add to your position if you're going up or if you're going down, but know where you're coming out if it is going down the other way. Don't just keep adding and adding and adding if the market's absolutely tanking. Again, you can read price action. You know, I'm saying this like I always go into a loss. I don't, but I can watch price action, I can read it. But a lot of the time, as I've said before, especially recently, when you're trading these opens, they're very, very whippy. So it's not like, oh, the market's opened, I'm going along anyway, and the market carries on tanking, I'm just adding. That's not how it works. If you trade the US Open, you'll know that you'll get some of that crazy movement in the first 10, 20 seconds. And then if you add here and then it drops by 20, 30 points, you can add again just above a round number or whatever it is, then you can ride the move up. You're not just adding into a sell position and waiting for it to reverse, because that's just absolutely bonkers. All right, and number two, risk management. As I said, it speaks for itself. If you don't have risk management, trust me, you will never be a successful trader. It's as simple as that. You just can't. If you're not very good with your money in your general life, I can guarantee you won't be a very good trader, because if you can't manage your own personal money in real life, you're not going to be able to manage money in trading. So you want to look at how to manage your money properly in real life if you want to be looking at being a successful trader. And number three, learning to take a loss. The market's going to be there tomorrow. You don't have to make all your money today. Do you know what I mean? But a lot of people think, oh, I've lost £200 today, I need to make it straight back. There might be a massive opportunity later on in the day or tomorrow. It's happened to me so many times. Lose 500 quid and think, oh, I've got to get this back now. Then end up losing 1,000 on that day. And then later on, about an hour or two later, some massive news will come out and the market will tank 500 points. And you think, like, why, if you just waited an hour, you'd have got all your money back and made more. But instead you've just revenge traded and jumped straight back in. So yeah, I hope that helps. All right, these are the three main things that I'm taking into 2022 with my trading. I hope that really, really helps you guys. As I said, these are the things that I'm taking into 2022 in regards to my trading. I stick them up on my wall, stick them up there, stick them on your forehead, stick them wherever you've got to do, get them tattooed on your arm if you want. But again, just make sure you're sticking to these rules and you will get consistent, trust me. All right, guys, love and leave you all. Peace.